Morning, we're here to cover AOB and we'll start by technical analysis. This is the all history chart since the company's IPO here in I believe mid 2000. You can see it was at almost $100 stock, and then it quickly fell down to about $5 or so. Over the medium term, the stock started a nice bull trend here in June 2005. Look at this bull run. I got just about, I can't remember, but half a dollar or so here, which was really a shame. And then we had a prolonged consolidation period here between November 2005 and August 2006, and another bull run then. Since late 2006, the stock had this considerable correction here from $14 to almost $9, almost touching here the 200 days moving average, which is a very significant support level. And now it is coming back up again. Let's check the short term. Well, with earnings, the stock was able to cross above this descending trend line, and it seems to be getting ready to defy these 14.19 all-time highs. Well, not really all-time highs, but 7-year highs. Let's check a bit of a fundamental analysis. Well, this is the number of shares outstanding and the market cap since 2001. The red bars are the number of shares outstanding, and the yellow line is the market cap. You can see there were just 10.1 million shares in 2001 and 64.8 million now, so there was heavy dilution here. And the market cap grew from 20 million in 2001 to $735 million now. It was just 3 million in 2002, so look how things can change. So the share count compound annual growth rate just since 2005, please note this, has been 8.2%. I'm considering here this is just for one quarter, this change of 600,000 shares. So I've estimated for the final 2007 number of 64.8. Let me see, 2.4 plus then more than 64.2 gives me 66.6, I believe, 66.6. So that's the number I've considered and got this share count CAGR of 8.2%. The market cap, this is since 2001, has been growing at 82.3%, but as we'll see next, the share price isn't growing as much because of this heavy dilution, which I dislike. As for the balance sheet, here we have long-term debt and the current ratio. Well, there's no long-term debt, and the current ratio is very high at 6. So it means the current assets are 6 times more than current liabilities, and cash and marketable securities account for 76% of total current assets. So this is really a very healthy balance sheet, and it's hard to understand why the company has been diluting shareholders' value so much. They really don't have the slightest regard for shareholders, in my opinion. That's not a good sign. AOB revenues and gross margin. Revenues are growing a lot. They were just 7.84 million in 2001 and 110 million in 06. For 07, analysts are expecting 148 million and 185 million for 08. And the gross margin has remained very stable here, just below 70%, as you can see, 70% in 03, 68% in 04, 67% in 05, and 69% in Q1. Revenues since 2001 are growing at an average annual pace of 63%, and the industry average, this is the biotechnology industry, by the way, just grew 11.8% from the year ago levels. And gross margin for our company is 69%, and the industry average is 98%. In terms of a price to sales ratio, considering 2007 estimate of $148 million revenue, AOB is trading at 5 times revenues, and the industry average is trading at a much higher multiple of 17.9 times revenues. Let's move on. Here we have earnings per share and net margin. Well, earnings per share were you can see the company has always been profitable every year since inception. 13 cents in 2001 and 46 cents in 2006, expected for 07 61 cents, but I believe that the company did just 10 cents in Q1, so it's not going to be easy to achieve 61 cents in 2007. Earnings per share since 2001 are growing at a 29% average annual pace, and net profit margin has remained here, you can see, very stable around 25%, 24.3% in 2004, 24.54 in 2005, 26.5 in 06, and 25.06 in the first quarter of 2007, and expected for the full year, so about 25% net profit margin. Price to earnings ratio of AOB, considering the 2007 estimate of 61 cents, is 18.6, and the biotechnology industry average is much higher at 42.6. So this is my evaluation model for the next 3 years. Here we have the initial share price 11.34, which was yesterday's close. Initial share count 66.55 million shares. I've considered the fully diluted number here. Dilution factor 8%. The share count has been growing at this rate over the past 2 years, and the balance sheet was already strong 2 years ago. So they have this habit of diluting shareholders' value. Probably insiders don't hold many shares. Final share count is 83.8% in 83.8 million shares in 2009 if they continue diluting at this pace. Initial revenue, this is 2006 revenue, 110 million. Revenue CAGR, I've considered 40%, but perhaps I'm being a bit optimistic here. But the historical growth rate has been higher. It has been, let me see where I have this, not this one, sorry. It has been 63%, but analysts are expecting a moderation of growth here. So I put here 40%, which gives me a final revenue number of 302 million for 2009. Initial net profit margin 25%. This has been very, very stable, so I expect it to continue at 25%. Final net profit margin estimate 25%. And this gives me a final net income estimate of $75.6 million, which is and translates into an earnings per share estimate of 90 cents in 2009. This is $75.6 million net income divided by the final share count of 83.8 million gives me 90 cents. Here on the earnings per share multiple estimate, I put 30, but the industry average is higher, 42 times. But I don't think this is a pure biotechnology company, so we can consider such a high earnings per share multiple. With all this computed here in the model, gives me a final estimated share price of $27.05 for the late 2009, and a share price compound annual growth rate of 33.6%, which I consider attractive. Anything above 16% is attractive for me. And the optimal, considering this, the optimal selling price would be 17.33%. This is the price at which the stock would start returning less than 16%, given this fundamental landscape. So this is an attractive stock. On a 1 to 10 scale, I give it an 8. Thank you. Bye.